everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and prepare for volatility. Now, we've been talking over the past couple of months about the transition to Donald Trump and what that might do for our markets. And my belief was we're going to see a significant amount of volatility. And I think that's going to increase. Starting this weekend, we saw Trump impose tariffs, 25% tariff on Canada, 25% tariff on Mexico, and a 10% tariff on China. Now, on paper, that sounds great. Good for America. Well, first off, that's a tax that's going to be passed on to you and I. And then the question was, what retaliation do these countries decide to give back to us? And it has been met with, of course, aggressive retaliation. What that means is we are now in the midst of a full-on trade war. Now, this could be a very good thing and a very bad thing, depending on which side of the equation you're on. As you can see here, Trump waving his fingers saying, not so fast. You bringing your goods into our country, you're paying a tax. Well, the American people will pay that, but it is going to create a tremendous amount of volatility, and I think we need to be very careful here. For those of you who are shorter-term traders, this is the moment you've been waiting for. Right now, the S&P 500 averages daily range about 53 points. My assessment of what's going on, because the decisions were made over the weekend, because the implementation of these tariffs on February 1st, you are going to see volatility at least 2x from here. So we're talking 100-point swings in the S&P over the next few weeks because the dust has not even settled. We just threw the first punch. Second punch came back on Saturday afternoon as well. So all of a sudden now we are in the midst of this thing, which will create a significant amount of volatility. You can see here on this chart that ATR down around 53. I think you're going to get highs back to the highs we saw just a couple months ago and maybe even exceed those. You could see 150-point ATRs on the S&P 500 because it is going to be wild. Now, that said, let's go back to some stuff that we can pay attention to and we know what's going to happen. That, of course, is the earnings announcements, which we'll start off right there. Now, this week is a pretty good one. As you can see here, we've got 687 companies reporting. On Monday, we start things off with Palantir and TSN. That is, of course, Tyson Foods. And, to be honest, Palantir has had one of the best looking charts I've ever seen. It is absolutely beautiful. I mean, you look at this chart here. It's just boom, 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 boom to the upside. A lot of expectations about AI and what they're doing. That could be probably the most volatile one of the week, although I have some bigger names coming up as well. So let's dive deeper into our Tuesday earnings with Google. You've got Toyota Motors, Merck, PepsiCo, AMD, Pfizer and Amgen, followed up on Wednesday by Novo Novartis, Disney, Qualcomm, ARM, Boston Scientific, Uber, which has been under a lot of pressure lately, and of course, the Michael Saylor special, the Bitcoin Haven MicroStrategy. That one will probably be very volatile as well. Moving on to Thursday, we've got one of our last remaining members of the Magnificent Seven. Of course, you saw Google on Tuesday. Here we have Amazon, you have Eli Lilly, AstraZeneca, Philip Morris, Honeywell, Bristol Myers Squibb, and ConocoPhillips. And not to be outdone, I had to put something on Friday's calendar, and that, of course, is the CBOE. I'm sure many of you will be doing a lot of options trades over the next coming days. Now, let's go back to the important stuff for the United States. What is really going to be driving this? Of course, it's the actions of the president and our new aligned government here, or newly elected government. We'll see how that all pans out. That's going to be the apex of volatility. Next is going to come down to economic data. And of course, this week we do have some pretty big pieces, particularly on Friday is your big day. But we'll start things off earlier in the week. Let's go to Tuesday. JOLTS job openings at 10 a.m. Eastern Time, followed by ADP non-farm employment change on Wednesday at 8:15. You have the unemployment claims at 8:30 on Thursday. And then Friday's your twofer. You've got the unemployment rate and non-farm employment change happening at 8:30 a.m. on Friday. Right now, the expectations are that the unemployment rate is going to stay right where it is at currently at 4.1%. Not that bad, right? 4.1 seems okay. Now, here's the thing. Over the next few months, again, these actions by Trump that just happened, right, over the weekend, that's not going to be felt in this data reported on Friday. It's important for all of you out there who are active traders that you keep your eye on this data because I don't believe we're going to see the impacts of these current tariff actions impact us for another couple of months. But as we start to get into the March, April, May, we'll start to see these numbers hit. And again, remember, these trade tariffs could have a significant impact on the U.S. economy. A lot of the car parts from Detroit, where are they coming from? Oh, Mexico. See, a lot of the agricultural stuff coming from Canada, right? A lot of the produce that we get comes from Mexico. So all of a sudden, this retaliatory tariff thing, I might not be able to buy cars for what I used to. I may not be able to get those avocados anymore on my sandwiches. a lot of different factors. Agricultural products from Canada, I mean, it could get pretty ugly here, and we'll have to see what the data shows us. Now, unfortunately for the long-term investors here, you like to take a step back and look at that big picture and discern where things are going. That completely got shattered over the weekend. It's going to be impossible for you to read with good clarity and high probability of where these markets are going to be at in 6 months or a year. Shorter term is difficult as well, but at least you have the ability to get in and get out. The data will start to reflect some of these changes down the road. And remember, it's not just about the US economy, it's about the Canadian economy, the Chinese economy, the Mexican economy, the EU economy, right? All of these numbers now, big question mark above everything. Going to be a wild one. All right, let's go back to our data, which is going to suggest more big announcements coming for central banks around the world. And that, of course, starts things off with the Bank of England on Thursday, 8 a.m. Eastern time. They have a rate statement. They're expected to come out with a rate decrease of 25 basis points from 4.75 down to 4.5%. And that should be good for them, right? Weaken their currency a little bit here. We can pull down those yields and get that economy fired up over there in the UK. And then, of course, you have the MPC bank rate votes. That's at the same time on Thursday at 7 a.m. Eastern time. And this will give you a little bit of a clear indication as to what the voting members were thinking with regards to their rate cut. Again, right now the expectation is they're cutting 25 basis points. But will some of them vote to raise, to lower, or to stay the same? And that kind of helps you understand what they were thinking, maybe what the next announcement will be. My guess is you're going to see a lot of them say that the next meeting they should probably hold where they're at 4.5%, once they make this cut, of course. Now, one last little piece I don't normally talk about, but this one's obviously from left field as well with this new administration, and that is this deferred resignation that's going on. Of course, you guys heard last week, President Trump said, hey, listen, if you government employees want to quit your jobs, you have to resign by February 6th, which will be Thursday. If you do resign by February 6th, we will pay your full salary and benefits all the way through the end of September of this year, basically 8 months for free, and you can walk and don't do a dang thing. Now, you're going to put yourself in the position of somebody who knows that their job might be on the chopping block. And I think at this point, looking at Elon Musk and his acts of terror with regards to Doge, that might mean a lot of people could be losing their jobs if they don't decide to resign. So step back and put yourself in their shoes. Let's say you work in a government position and you're like, well, I'm pretty sure Elon's going to come and chop me. I haven't been doing squat for the last couple of years. My job's probably going to go away. You can either stay there and hope that they keep you and you keep on working and maybe get away from that axe. Or you can take a 8-month golden parachute and jump and just say, cool, I have 8 months to do nothing. If I want to retire, go on vacation, do whatever. I could go on vacation for 3 months and still have 5 months to look for a new job and I'm getting paid the whole time. Man, I have a feeling you're going to see a lot of people take them up on this offer. And again, we'll find out what those numbers look like on February 6th. And remember, there's this kind of a pendulum here. If not enough people, or if nobody decides to take this offer, well, then you're going to hear some aggressive cuts coming in, shock factor. If too many people take this offer, we may be looking at a situation where the government's going, hold on a second. Too many of you left. We need some of you to stay to keep things going. It will be wild, will be interesting. It just adds another layer of volatility to an already incredibly volatile trading week. Of course, the trade tariff topic is nothing out of the playbook, right? It's something that we've seen historical presidents use going all the way back to the 1800s. Well, I don't know. We'll see how this one all pans out. I can assure you this. There will be a tremendous amount of volatility over the next few months. Be careful. Use your stops. I'd be much more concerned with my downside risk here on all of my positions, regardless of what style of trader I am. There will be a lot of volatility. I, for one, will enjoy it, and I hope to see you in some of our classes soon, maybe to brush up on how to trade in a more volatile market. That said, we will see you guys next week on Monday Morning Must Knows.